Welcome back to Life with DJ Sessions. My NMLS number is 271823. Today I'd like to discuss rental income breakdown for qualification purposes. There are definitely many programs out there. However, today's lesson is specifically around Freddie Mac's guidelines, right? They're one of the agencies. So number one, ensuring income stability, okay? For a solid start, we need your rental income to demonstrate stability over the past 3 years, deriving from verifiable sources. Number two, expanding rental eligibility. The spectrum of eligible rental income extends to live-in aids, accessory dwelling units, also known as ADUs, within your primary residence, and income-generated units within multifamily homes. Notably, even non-residential investment properties are considered, right? So if you got commercial properties, that also generate income. Number three, second home clarification. Income derived from second homes does not contribute to the qualification criteria. That's interesting, right? You may have a home in Florida and you may Airbnb it. You're not using that second home. Now, if it's a rental property, that's different. Number four, lease documentation protocol. Lease documentation mandates a meticulous approach, 75% of the gross monthly rent with a 25% adjustment to account for potential vacancies and operating costs. Okay. Number five, Schedule E calculation. Okay. This calculation process involves referencing your Schedule E, systematically deducting total expenses from rents received, and selectively reintegrating specific expenses. Okay. Number six, expense add back criteria. Okay. Now, notably, certain expenses on Schedule E are reinstated into net rental income calculations only if they are an integral part of the payment structure, influencing the debt payment to income ratio. This includes, right, your mortgage interest, real estate taxes, and homeowners association dues. Number seven, addressing one-time losses, okay? In instances of singular financial setbacks, such as a documented catastrophic event, these losses are acknowledged in the overall net rental income calculation, right? And we experience that. Number eight, consideration of non-cash deductions. Non-cash deductions such as amortization, warrants, acknowledgement, and subsequent inclusion in the overall net rental income calculation. And number nine, monthly net rental income precision. The ultimate objective is to distill the net rental income into a monthly figure, aligning with the precision required for mortgage qualification assessments. In summary, this just articulates the intricate facets of rental income consideration, underlining the requisite attention to detail in the mortgage qualification process. Again, like I mentioned earlier, there's a lot of different programs out there. But if you'd like to learn more, visit sessionslending.com. Thank you.